And we are live. Ladies and gentlemen, let me know if you can hear me loud and clear. It's coming in on my end, so I think we should be good. Thank you for giving me some of your eyeballs for just some wee minutes on your very, very valuable Wednesday. Hopefully you're all doing very, very well. It is 6:01 p.m. Pacific Standard Time on the West Coast, 9:01 p.m. for all of my East Coast brethren and sistren. What's the correct feminist term for brethren? Is it sistren? Brethren, feminine version? Sistren. Okay, it is sistren. What's the non-binary version? Because I want to be able to accommodate for all people. Let's take a look. So you have brethren, sistren, and then brethren, non-binary version. So esoteric. I've seen brethren repurposed for such. Friends, fellows, or companions might work. So if you're thinking of using brethren in front of a non-binary person, do not, because that's a trigger for them. Be sure to use companion. That'll work. But we have some midweek market recap to attend to. Stock futures are little changed as investors weigh health of job market and the economy. Stock futures were near flat Wednesday night as investors considered what the latest data suggested about the health of our broader economy. More on that in just a wee minute, I promise. Trust, baby. Trust. Futures tied to the Dow Jones Industrial Average lost 12 points, trading near flat. S&P 500 futures slipped 0.07%, and NASDAQ 100 futures declined 0.13%. During regular trading Wednesday, the technology-heavy NASDAQ composite performed the worst of the three major indexes, losing nearly 1.1%. The S&P 500 dipped about 0.3%, and the Dow bucked the trend, raising 0.2%, in part because of the outperformance from healthcare stocks. Those moves come as investors digest the latest data released this week to see if the labor market has shown signs of weakening. And let's take a look at that labor market data. ADP announces that their private payrolls rose by 145,000, which may sound good on the surface, but it's actually way below the estimate of 210,000 people. Financial activities lost 51,000 jobs, and professional and business services fell by 46,000. That being said, leisure and hospitality added another 98,000 workers. Trade, transportation, and utilities grew by 56,000, and construction rose by 53,000. This took first quarter hiring. So also we made it to Q2, everyone. Congratulations. We all lived. But if we break down the month-to-month hiring for the first quarter hiring average was just about 175,000 jobs a month, down from the 216,000 from the fourth quarter of 2022, and a sharp reduction from the average of 397,000 from the first quarter of 2022. Annual pay rose at a 6.9% rate in March, down 7.2% in February. So we are seeing some wage stagnation there, but hey, baby, it's not America if there's not wage stagnation and the cost of living keeps going through the roof. Job growth was almost evenly split between services and goods producing firms, an unusual occurrence. The U.S. economy is heavily services oriented, so that sector generally produces much stronger hiring gains. The data released Wednesday showed a gain of 75,000 in services and 70,000 in goods producers. Now, the rest of this stuff is just kind of showing, like, you know, some overall different sectors that are moving up and down. There is going to be the the Friday non-farm payroll report is coming out from the Labor Department. So that's really the bread and butter. I do wish that they did include the farm payrolls in here, because I think that's a really important thing. But this is generally the bread and butter for where we're looking at how the labor market is doing. That being said, job openings tumbled below 10 million openings in February for the first time in nearly 2 years. Available positions totaled 9.93 million, a drop of 632,000 from January's downwardly revised number, according to the Labor Department's JOLTS report. It was the first time vacancies fell below 10 million since May of 2021. So A big pillar of what the Federal Reserve was doing and has been doing to the interest rate increases was tied directly to this idea of having a white hot job market. And to be fair, like, we kind of did. There was record low unemployment, which I think might be a little bit of a scam, and we can get into that. Actually, we can take a look at it right now. At the Dylan Holy Experience, we go off of the U6 unemployment index. So this record low unemployment comes from the U3 index, which like doesn't really include all people not working. It just includes people that have not been that have been out of the job market for more than 100 weeks. So people that are on like permanent disability and stuff like that, which like is totally fair, but the U6 unemployment rate is including like able-bodied people. So people that like are actually able to work. And although it's nowhere as high as it was like in 2020, it is definitely ticking up. And I think this white hot job market, it probably wasn't as white hot as what the Fed was saying, but we are finally now getting the long-term ramifications of what an interest rate hike is actually going to do to a labor market, to a lending market, and to the valuations of most assets that are directly impacted by financing. So we're taking a look at auto loans. We're taking a look at the real estate market as a whole. So I do think stuff is slowing down, and this is exactly what the Fed wanted to do. They're talking about having a soft landing and it being a contraction period. I think soft landings are bullshit. I don't think listen, baby, it's going to be a hard landing, and stuff's probably going to suck. We're probably going to see a bunch of people laid off. Hell, speaking of which, y'all, speaking of these layoffs, I found this freaking sweet site. I know like most people already in the finance community are like, oh, Dylan, we've been able to see this for a long time. But layoffs.fyi, I'm definitely going to start using this. It's like a live feed of, I can see like how many people from the tech industry have been laid off. Within the last 12 months, 167,903 employees have been laid off in tech. And speaking of layoffs, General Motors, they put out a report earlier in the year talking about how they're going to offer salary buyouts to 58,000 of their white-collar workers. And GM has now had 5,000 salaried workers actually take those buyouts. So, yeah, that's another big thing. I think that we're going to see further layoffs. I mean, these tech companies are still extremely bloated, and this isn't a matter of like these people aren't talented. They are talented. I mean, like people that have computer science majors are extremely talented people. But if we're looking at valuations of what these companies are doing to make money, like if we're taking a look at Tesla, listen, this might be a hot take, but I actually like Elon Musk. Oh, well, I like him more than other CEOs. I think he's generally fine. I don't think he's that bad. But if we're taking a look at like the price earnings ratios, which is basically the perfect gauge, or I think it's the best gauge in terms of how to gauge where like a company is at in terms of how the market is valuing them. Where can we take a look? Come on, man. Why are we denying the millions this information? Come on, baby. Where are we now? They're really not showing it on TradingView? Bro, this is an L from TradingView. Well, so like if we take a look at Tesla's price earnings ratio, PE ratio, there we go. Yeah, Tesla's price earnings ratio is 190. So for every dollar of profit that Tesla makes, people are willing to buy that dollar of profit for $190. And that's a little absurd. So I definitely think there's going to be further layoffs in the actual tech field. And that's not a matter of like layoffs aren't necessarily a negative thing from like a macro point of view. Obviously for the people that are getting laid off, my heart at the Dylan Holy Experience and the Dylan Holy Experience as a whole is going out to you. So, best of luck to you. But like a contraction period is a neutral event. That's just it. People say like, oh, it's not fair that people are getting laid off. It's not fair that like in capitalism, we have expansion and contractionary periods. I think it's fine. I think a contractionary period is a neutral event, just like how in the same way an expansionary period is a neutral event. The only reason we think that expansion is better is because the money in our accounts go up. on paper. We most people don't take profits, me included. I have not taken a profit, and now I'm down horrendous because of this crypto winter and the recession. But hey, baby, that's all good. That's all good. Speaking of being down bad, Sweden's largest pension fund, Alecta, reported a nearly $2 billion loss tied mostly to the U.S. banking crisis. Now, what was Alecta invested in, the millions ask? Well, it was in three wonderful financial institutions. They were invested into Silicon Valley Bank, they were invested into Signature Bank, and they were invested into First Republic Bank. Absolutely fucking brutal. All like, whoo, hot tamale, baby. Now, that being said, it is important, if we take a look at the actual assets under management that Alecta does have. So let's take a look at the Alecta assets under management. If we take a look at the Alecta assets under management, it has... Now they're saying, what Alecta is saying is they have... Okay, so they have... Okay, in Swedish krones, they have they basically have 1.1 trillion. So let's see, they have 107 million in Swedish krone. 107 million in US dollars. That can't be right. Are they lying? Is Alecta lying to us, man? Come on now, man. Well, nonetheless, they lost $2 billion on these banking investments, which is a touch rough. Their risk management team said that they were going to reevaluate what they're investing in, which I think is probably a good call, judging that 3 of their investments basically got completely wiped out and they lost $2 billion. But they'll work it out. They got it. Speaking of... well, I guess it's not necessarily banks going under, but the U.S. dollar getting a little more shaky, long-term macro. India has announced a $17 billion bilateral trade between itself and Malaysia that is going, and this is pretty crazy. And we covered this on I think the last midweek market recap, but they are going to be making a trade denominated entirely in Indian rupees, which follows the France and Chinese liquefied natural gas trade. Yeah, liquefied natural gas trade that was denominated in Chinese renminbi or yuan. So yeah, man, they're getting rid of this petrodollar standard, and it's not like, I don't want to do a doom and gloom. This isn't necessarily a doom and gloom thing. It's just the matter of fact, countries are trying to get off of a dollar standard. And as an American who uses dollars, somewhat worrisome. But hey, baby, that's why we got Bitcoin, right? D-Bank. Not financial advice. I do own Bitcoin. No word on if it's going to overtake the US dollar as a world reserve currency. But it is interesting seeing these new trading packs going on. I saw that there was an Iranian, Chinese, Indian, and I think it may have been Malaysia in there, or no, it was Russian. All 4 of them, they made a trading pact where they were going to start trading with each other in non-denominated US dollars. So they were going to basically be using their native currencies to do trading. And it's just part of this larger de-dollarization effort, which I think long-term, people realize, hey man, the US has kind of been fucking us over. And as an American, my quality of life has increased, and anyone who wants to be like, Dylan Holy can't say that. That's not okay. You can't say that your quality of life has increased. Guess what? You're probably American, and your quality of life has also probably increased from us fucking over other countries. Is it a good thing that we fuck over other countries? I mean, my life is better because of it. Obviously, from a globalist perspective, it's, everyone, there should be no borders in an America. The idea of being American is stupid from a globalist perspective. But I do have a sense of national pride, and I like the idea that my quality of life is prioritized first over other countries. And I think, you know, and like it makes sense that other countries don't like that. They want their currencies to be stronger. And you know, in capitalism, people vote with their dollars, vote with your wallet. And they're voting with their wallet by doing trades denominated in non-US dollars. Now, what's the U.S. doing to counteract that? This may be hyperbolic, and this direct event isn't probably because of like China and France completing the first Chinese renminbi settlement of a liquefied natural gas trade, but the U.S. Army has awarded $4.5 billion to Lockheed Martin for joint air-to-ground missiles and Hellfire missiles that could be worth up to $4.5 billion. So, hey, baby. We don't like the U.S. military, which is what, you know, most people that are currently in office are saying right now. But we're still giving them $4.5 billion. The Department of Defense budget, we talked about this too, but the Department of Defense budget for 2023 is the highest it's ever been. Every year, the defense budget keeps going up. People talk about like, oh no, we're going to scale back defense budgets and give it to like a social welfare system. Nah, man, they're going to give them $816.7 billion. This is the highest on record. So they're just using that to make some missiles, get some tanks, give $40 billion to Ukraine. Fuck it, who cares? But yeah, man, I'm a Lockheed Martin shareholder, so it is good for me. It means that they're going to at least be using them for like the next few years. Yeah, it's a multiple year deal. Does it actually say, oh, I have to log in to Defense Daily? I'm good. I'm not going to log in to Defense Daily. But yeah, man, Lockheed Martin making that paper. And I do think that if the US dollar were to lose world reserve currency status, I think shit's going to go off the walls pretty quick. And that may sound doom and gloom, but that's like a real destabilizing event. And that's when stuff gets real, like in World War I and in World War II, when the pound lost its reserve currency status, shit went bonkers, dude. We had like basically like a 40-year war. I mean, like obviously it was like 20 years of like peace, but people were making armies, conquering territories. So it like when a world reserve currency loses status, shit goes haywire. And these type of events where they are no longer using a US dollar or like a petrodollar kind of thing, shit goes off the walls kind of quick. Like this is the same kind of stuff that was starting out in Japan in the early 1900s when we slowly started, you know, sanctioning them, phasing out Japan in trade. And then Japan was like, well, we're just going to go attack them in Pearl Harbor. Not saying they were right in attacking Pearl Harbor or anything like that, but that's Japan got backed into a corner. And these types of events, these types of situations, there are going to be parties that start getting backed into corners. Now, speaking of getting backed into corners, damn, dude, these segues are so damn good. Speaking of getting backed into corners, Mark Zuckerberg, who spent the majority of 2021 and 2022 touting the metaverse and their Reality Labs division. Apparently now he's spending most of his time on artificial intelligence, says the Meta chief technical officer. Now, you know, most of this stuff is just them talking about how, you know, they have their large language model called Llama, which I think is quite funny. And this is just, you know, a part of a larger industry push from big tech to get into the artificial intelligence space. But it seems like Meta's kind of floundering, dude. Like, you know, I was talking to someone about this, but MySpace's death was very, very swift. And I think what's going on with Meta right now is they are clinging on to they're trying to cling on to something to keep them relevant, to keep them profitable, to keep the value proposition for Meta there. And, you know, I think this idea that like, oh, Reality Labs is a failure because they lost, you know, $13.72 billion in 2022. The issue with that is the market often price, and most people in general, they often price in like short-term gains. The Reality Labs investment is not an investment that's going to start paying dividends. Well, Meta doesn't pay dividends, but figuratively pays dividends within the first year. This is a 5 to 10 year play for Meta, or formerly Facebook. And the fact that Mark Zuckerberg's like, well, it's not really working, I'm just going to go to AI. Bro, you can only have so many large language models. And I think that all of them will be able to integrate at some point, but Google's Lambda and now their Bard AI, which, by the way, I am able to use it, and I put that up on Twitter. Speaking of which, you know what? Screw it. Do you know what time it is? A Dylan Holy Twitter plug, @RealDylanHoly. I'm giving y'all breaking news literally every single day, hand parsed from the internet. I'm also giving y'all your key takeaways and market moves, so you know exactly what's going on in the market. Gold went sideways today. Speaking of which, dude, gold hit an all-time high. Gold hit an all-time high like yesterday, and no one's talking about it. That's pretty crazy. That just goes to show how much faith people have in the current financial climate. But no, I think that Meta's probably going to, I mean, it's stagnated and it is declining. I mean, shit, if you look at their stock price, it is looking dire. Let's take a look, dude. It's looking dire. I mean, it's not too bad. It was down like 70%. Now it's kind of rebounded. It's doubled from its lowest point, which is good. But I do think that they are floundering right now. There's nothing there that is keeping them going. I mean, the artificial intelligence space, it is just getting started, but there's a lot of big players, and we haven't really seen anything from Meta, from its AI division, and we can take a look at that. They're doing a new product group that's focused in generative AI, working on AI products for Instagram and WhatsApp. A new set of techniques that allow computers to generate text, draw pictures, and create other media that resemble human output. But why? Why do we need this? And it's the same thing for the metaverse right now. Like, I think the metaverse, maybe not within Gen Z, but the next generation, I think it's going to be really normalized. And I definitely think that the metaverse is something that does have a value proposition behind it. The issue is we don't really have one right now. Like, what's the point of it? We can go into Horizon Worlds and play a game. That's a novelty. Same thing with AI. At least with how Meta's trying to do it. Like, who cares if, like, they're generating pictures? Like, it's Instagram. Like, the whole point is for people to view other pictures of people. Like, there's no profit incentive behind it right now. Obviously, I think this is a multi-year play, and I think Facebook, well, Meta now, is going to keep further investing into it, further realizing this vision. So, you know, it is probably too early to call, but there's just nothing that Meta is doing in the short term that really is making a difference. Like, yeah, Cicero, that's what it's called. Cicero. I'll have to play around with Cicero. But I don't know. I don't like Mark Zuckerberg, and I generally am kind of rooting for Meta's collapse. I want to see Meta fail. I more just want to see Mark Zuckerberg fail. I don't want to see, like, the people within Meta that are working for Meta fail. I just don't like Mark Zuckerberg. And I think most people don't like Mark Zuckerberg. Now, speaking of big tech and actually artificial intelligence as a whole, Google has revealed its new AI supercomputer, and it is called TPU v4. Over 4,000 tensor processing units, an integral component to Google's AI computing, and it's touting a 1.2 to 1.7 times faster performance than NVIDIA's A100, which is their last gen. They actually didn't talk about, well, they did address their current gen, which is the H100, but they didn't run any tests against it, which I do think is interesting. So with the improvements, maybe nominal, if not anything at all. But versus the A100, it's 1.2 to 1.7 times faster, and it uses 1.3 to 1.9 times less power. So we are in this early stage and this immature stage where, like, there is a lot, like, there's like exponential growth in artificial intelligence computing. I do think it's going to mature over time, but maybe not, because artificial intelligence can, like, infinitely get smarter. So I am interested to see where this goes. I am going to do a further write-up basically comparing it to its, TPU v3. I think that's an interesting comparison as well. So keep an eye out on that @RealDylanHoly on Twitter, of course. And lastly, this is a big one. I'm a big WWE fan. And last weekend was WrestleMania weekend, and I live tweeted that whole damn thing. So be sure. I mean, if you want to take a look at how I was feeling about it, go through my Twitter. But there were some rumors that WWE was going to sell to Endeavor Group, which currently owns UFC, which would bring WWE and UFC under one publicly traded company. And that ended up happening. So the deal values WWE at $9.3 billion and UFC at $12.1 billion. So under the same roof, the company is going to be worth $21 billion. Now, this deal is expected to close in the second half of 2023. The actual company's name is going to be announced at a later time, but the ticker symbol will be TKO, which I like. I'm a big fan. Ari Emanuel is going to act as the chief executive of both Endeavor, which is the current UFC holding company, and of the new merged company. Vince McMahon is going to stay on as the executive chairman of the WWE, and Endeavor president and COO Mark Shapiro will also work in the same roles at the new company. Dana White is going to remain as president of UFC, and current WWE CEO Nick Khan will be president of the wrestling wing of things. The board will consist of 11 people, 6 appointed by Endeavor and 5 by WWE. And here's what's going on with this kind of stuff. So, Endeavor is slated to own 51% of the new combat sports and entertainment company, while WWE shareholders, myself included, because I am a WWE shareholder because I love the product, so I invest into the product and get a nice little dividend. WWE shareholders are going to get 49% of it. I'm interested to see where this goes. Apparently, Vince is back in creative. So Triple H was running stuff over WrestleMania weekend, and he's been running stuff basically from like July to WrestleMania weekend. And I think he was doing a killer job. Night 1 was probably my favorite night of WrestleMania ever. Night 2 was okay. But Monday Night Raw, that's kind of when Vince took the reins, allegedly, of things again. And it kind of went off the rails. There was no cohesion to stuff going on. But we'll see what happens. I'm excited to see what ends up happening from WWE and Endeavor and this new merged company as a whole, because I like the product. I find it interesting. Actually, yeah, I do find it interesting, and I absolutely love it, man. I've been watching this shit since I was 7 years old. But there we go. Midweek Market Recap. Thank you all so much for watching. I think now's the time where we can get into our subtle little plugs. First things first, twitter.com @RealDylanHoly. This is where all the magic happens, dude. So we've got like, whenever we go live on the Dylan Holy Experience, you are the first to be notified on Twitter. So, dude, like, I gave y'all an hour heads up on when the Dylan Holy Experience was going live with the Midweek Market Recap. We have the key takeaway. So every market day, I'm giving y'all the most important hand-parsed pieces of information and what's going on in the market as a whole with your market moves. And, of course, I also just bullshit on Twitter, as one does. YouTube.com/@DylanHoly, which is where half of y'all are watching right now. Be sure to give me a subscribe. I'm giving y'all the best content, the best financial content on planet Earth, no question. And lastly, be sure to give me a follow. Twitch.tv/RealDMH. And I believe that's everything. Thank you all for watching. I will see you all next week for your Midweek Market Recap. Have a good one.